This is a video chart presentation of PositiveID Corp. PositiveID is an OTC QB tier company trading under ticker PSID. See, this is a look at a one-year weekly chart for PSID. It's a nice climb so far in 2014. It's finding a base here around 2.5 cents, all the way up to almost 14 cents. Stock has slid off from those highs, but right now it's coming up on a trend line off of this bottom. A little bit of a triangle formation that's going on, reaching oversold conditions. And with those things in mind, we think it's time to keep an eye on this chart to see if it's prepared to reverse course again. I can see the MACD, a long-term move back towards zero. As often happens, difficult time pushing through that zero mark on the first attempt. What we'll be watching for now is a bullish cross of the MACD passing through the signal line, and then ultimately a break back up into positive territory to indicate that the bullish trend is strengthening. So with it right now trending right around zero, that's something to keep a close eye on. Money flow index is still in a real nice position, holding the upper half of the indicator, suggesting that even though that stock's been sliding back from those highs, there's still more bullish pressure in it than it appears just by looking at the candles. And that's also evident by looking at the Chaikin money flow, which if we go back to October, it would make sense that Chaikin money flow is trending upward. Stock price has been trending upward since that point as well. But in the more near term, right through this area from February, coming forth to now, you can see the Chaikin money flow still trending upwards. And that's right through this area where the high was hit and the stock price tapered off. And with that Chaikin money flow moving back towards zero, that really questions the strength of that downtrend that's been established, especially considering the fact that the current value of the CMF is just below zero. Technical traders typically look for a little bit of a buffer zone to avoid any potential whipsaw action, but that break of the zero mark is ultimately the first sign that the stock is starting to close at higher prices, and it's typically a bullish indication. So it's something to pay attention to, especially in combination with these other indicators. Relative strength index, probably the most commonly used gauge of momentum. Not getting much from that at all, other than the read that's moving into oversold conditions, which at the bare minimum is time to look for a bounce in the play, but ultimately want to see it over top of 50, show that the bulls have control of momentum. Now, as I mentioned, we see in this weekly chart that the candles are coming upon a trend line. I'm going to draw it there to the low end to catch all the intra-week moves. Some people might draw it up at closing prices, which would actually put it just a hair higher. We're going to take a slightly more conservative approach and catch those inter-week moves. Top side would be somewhere right through there. And I think one thing that's important to note is a static support level right through this area of 4.5, 4.6 cents. You can see since moving through a resistance point and gapping through that in February, chart hasn't closed below it. Any dip pulled promptly back up, even a touch of it here to kick off June, pulled right back up and actually closed solid that week. So at this point, we're going to look for the static support to hold. Below that, definitely see some more at 0.4. As it stands right now, though, we're going to watch this level of support because in the past 2 months, that's proven to show as a buying opportunity for people, as indicated by the stock price pulling right back up. To the resistance side of things, there's actually just not a lot of resistance points. Right through here around 6 cents there's some, but from Thursday's closing price, that's a pretty substantial move, which is something that we always look for. Stock on support, nice upside to resistance. It's also notable that on the weekly chart, you can see the 50-day coming right in. A move back above that level is a bullish sign by breaking back through the 50-day. The next static resistance I'd see would come in around 7 cents. And I actually consider that a more substantial area of resistance, simply because of the bounce in November off of it. It was serving as some resistance all the way back here last August, and it was a pretty nice level of support from March through May. I also think that's a significant point because it's breaking this trend line, and I would expect upward pressure to continue if that trend is broken. Now, I'm not even going to draw up. There'll be some more resistance up here, 8.5, 9 cents. We try and stay more near-term focused, and of course that begins by holding the support level and some upward pressure to challenge resistance, which if this first resistance is broken, and certainly the second one, we'll see the MACD move into positive territory. We'll see the indicators in general start to show strong momentum and trend, and we'd expect the uptrend to continue at that point. Volume's not much of a concern. There's plenty of liquidity in this play, trading somewhere on average around 700,000 shares a day, equating to about 2.5 million shares already traded this week. You can see some slightly lower weeks, but then again, some bigger ones, 5 million shares trade. Point being, liquidity's not a problem. We'd like to see a volume surge off a support point, similar to through here, which of course lends to the idea of buying interest and technical traders seeing it as a support level. In general, real nice move in 2014 so far. Stock's still basically doubled up in value, and right now, worth the watch to see how these trend lines play out. But as always, merely our interpretation of the PSID chart. I'm not a financial consultant. Strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure, and do not base any investment decisions upon any material found on the website and/or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.